Hello and welcome back to my channel. For this video, I want to shed some light on input tax credits because I get a ton of questions about them in the comments all the time. So I think it's overdue that I make a video all about them. If you're a new Canadian small business or you just became self-employed and you have no idea about taxes, but especially sales tax, listen up. But first, because I get so many questions about taxes, accounting, and bookkeeping, and often get asked if I offer any consulting or tax help, I do not. However, my friend Jamie Monty, who is a CPA, does. You can learn more about her services and courses by checking out the link that I included in the description for this video, but that is kind of the person I would direct you to. Okay, so let me break things down a bit first. If you start a business in Canada and your business earns $30,000 or more in either one calendar quarter or over the course of 4 consecutive calendar quarters, a year, you are required to register for GST/HST through the CRA. This $30,000 threshold trips people up all the time, and I get it. It is sort of confusing, so if you still need some clarification on exactly when you need to register your business for GST/HST, either check out my video about it, I will link it in the description, or check out this page on the government's website that has a bunch of examples to make it make sense. Again, we'll link it in the description as well. With that said, you can also voluntarily register for GST/HST at any time. For instance, let's say you start a business and on day one, you decide that you want to collect GST/HST from your customers even before you've reached that threshold. You can absolutely do that. You can register for GST/HST at any time, even before your business has earned its first dollar. Now, you may be wondering, why would you do that? The reason is because of input tax credits. Now, before I share more about that, I do just want to make you aware of something really important that most people don't know about. Once you register for GST/HST, you can't undo it or deregister your account, with the exception of your taxable business revenues falling below the small supplier limit calculation amount. But even still, you need to stay registered for at least 1 full year before you can ask to close your GST/HST account. And if you're a taxi operator, rideshare driver, or a non-resident performer selling admissions to seminars or other events, I know that's super specific, but those are the rules. Even if you're a small supplier, you're not allowed to deregister. Then the only other situations in which you'd be able to close down your GST/HST account would be if you're closing down your business. For more information on this, check out this page that I'm going to link to in the description on the government's website. Okay, so let's say you've registered for GST/HST. What's next? Well, from then on, your job is to first charge your Canadian customers GST/HST on your goods and services that you're selling. FYI, you do not charge customers who live outside of Canada GST/HST. They are considered exempt. Now, in order to do this, you need to make sure that you're using a platform that allows you to collect sales tax. For instance, for many years, I used a platform called Quaderno when selling my Wealth Building Blueprint for Canadians course. And that was because the course platform I used did not offer a way to collect sales tax from my customers, which was super annoying. That platform is Thinkific, and luckily they now offer that in their checkout, so that is what I do. However, I also use Shopify, so that's another way that I collect sales tax. And lastly, when I'm dealing with one-on-one clients, I use QuickBooks, and so that's kind of built into the invoice. Moreover, on the financial management side of things, I'd also suggest making a separate bank account to hold the sales tax that you collect, so it doesn't commingle with your business income. I see that as a mistake that people make. Make sure there's a separate bank account. This is so you do not accidentally spend the sales tax that you collected on, say, business expenses, for instance. After that, on either a quarterly or monthly schedule, you need to file a GST/HST return to tell the CRA how much you've earned and how much you've collected in sales tax. And ultimately, you have to hand over that money to the CRA. You do both of these actions by signing into your CRA My Business account, filing your GST/HST return, and then setting up a payment. It can be intimidating the first time you file and pay your GST/HST, and I do have a tutorial that walks you through how to do it. But honestly, you will soon get the hang of it, especially after you've done it at least once, and it really should only take you a few minutes to do, assuming you've got a good bookkeeping system in place. For instance, you can use one of my budget spreadsheets to keep track of all of your sales tax, your business income, your business expenses, all of that. They are available on my website at jessicamoorhouse.com/shop. However, if your business is pretty comprehensive and you have a lot of customers or lots of different goods and services that you sell, at a certain point, I would say it would make more sense to move away from a spreadsheet and invest in accounting software like a FreshBooks or QuickBooks. I used FreshBooks for a number of years in companion with my spreadsheet actually, and now I just use QuickBooks. And if you start to feel like doing your own bookkeeping is taking you away from your actual business, that means it's time to outsource to a professional bookkeeper. Now, for years, when I was just starting out with my own business, I did it all myself, and I actually kind of enjoyed it. But about 4 years ago, I realized it just wasn't necessary, and I needed to outsource. So I finally hired a bookkeeper who keeps all of my business finances organized in QuickBooks, and honestly, it has been one of the best investments that I've made in my business. So you may be wondering at this point, if you're doing all this extra work for the government, essentially, collecting money for them, then handing it over to them, what's in it for you? The answer is input tax credits. You see, when you pay GST/HST on any of your business expenses, you can actually get some of that money back through input tax credits. In other words, input tax credits allow you to recover some of the GST/HST that your business pays on purchases. Let me show you what that would look like. So you've got your GST/HST form ready to go. In line 103, you'd input the total amount of GST/HST collected by you. Then on line 106, you'd input the sum of the GST/HST you paid on qualifying purchases and expenses for your business. Then you deduct the amount on line 106 from line 103, essentially subtracting any of the GST/HST you paid on business expenses from the amount you collected from customers. Now, speaking of expenses, it's really important to understand which expenses qualify for input tax credits, because not all of them do. The following may qualify as input tax credits: business startup costs, business use of home expenses, delivery and freight charges, fuel costs, legal, accounting, and other professional fees, maintenance and repairs, meals and entertainment, the allowable part only, motor vehicle expenses, office expenses, rent, telephone and utilities, and travel. In terms of common expenses that cannot be claimed as input tax credits, they include certain capital property, taxable supplies of property and services bought or imported to make exempt supplies of property and services, membership fees or dues to any club whose main purpose is to provide recreation, dining, or sporting facilities, including fitness clubs, golf clubs, hunting and fishing clubs, unless you acquire the memberships to resell in the course of your business. And lastly, property or services you bought or imported for your personal consumption, use, or enjoyment. Not only that, it's important to know there is actually a time limit for claiming input tax credits. In general, you've got 4 years to claim your input tax credits, which is why, personally, I think it makes the most sense to claim those input tax credits in the reporting period in which you made that purchase. The only situation where it would make sense to hold off doing that is if you didn't collect enough GST/HST to apply to any of your input tax credits. With that said, let's say you don't collect any GST/HST from customers in a reporting period, but you do make some business purchases that provide you with some input tax credits that you can claim on your GST/HST return. If this is the case, you can actually receive a tax refund for this. However, depending on the amount of input tax credits you're claiming, well, it may trigger an audit from the CRA. So just be aware of that. Well, that's pretty much all you need to know about input tax credits. I feel like they're one of those things that people think they're more complicated than they really are, but they're actually really simple. And like I said, once you file your first return and make that payment and realize, oh, that took me just a few minutes, yeah, you'll realize how easy and simple it really is and how great it can be, again, to kind of get back some of the tax that you're paying on your business expenses. I hope this video has been really helpful, but if you have any questions about anything I went through or any questions about anything at all, let me know in the comments. Thanks for watching, and I'll see you in my next video.